See, when there is a change in the partnership, okay, what are the things
Yes.
that you do? When there is a change in the constitution of the partnership, you calculate their new ratio, first thing. Second thing that you do is that you distribute the undistributed profits or losses among the partners.
Yes,
Third
ma'am.
thing that you do is you do adjustments for goodwill. Fourth thing that you do
Yes, ma'am.
is you do revaluation of your assets and liabilities. Are you
Mm.
with me?
Yes, ma'am.
So I am teaching you how do you revalue your assets and liabilities. Now you know that when there is a partnership, the partners, old partners will have their old balance sheet.
Yes, ma'am.
Okay, the old partners will have their old balance sheet. Can you tell me how does the balance sheet look like?
Ma'am, is it like there will be like a liability side and asset side?
So here on the left will be your liability side and on the right will be your asset side. Okay,
Yes, ma'am.
so you will have your fixed assets over here like plant and machinery,
Yes, ma'am.
building. You will have your current assets over here like your closing stock, your debtors, your cash in hand, cash at bank. Yeah.
Yes, ma'am.
The liability side, what will you have?
Capital reserves.
Capital, reserves, creditors,
Creditors.
outstanding expenses. Okay. So when there is a reconstitution of a partnership, what happens is that the old balance sheet has to close down. I'm repeating again. What happens is that the old balance sheet has to close down.
Close down.
A new balance sheet has to be prepared.
Yes, ma'am.
So when you are preparing a new balance sheet, that means the new balance sheet should be prepared at new value. So in this case, you need to do what? You need to revalue your assets and liabilities. Can you
Yes,
first
ma'am.
go through this and write your notes about it?
Okay.
What do you have to do in such a situation? You have to close the old balance sheet and you have to prepare the new balance sheet. So when you're closing your old balance sheet and you're preparing your new balance sheet, basically what are you doing? You are going to make the new balance sheet at a new value.
Yes, ma'am.
You're going to make the new balance sheet at a new
At a
value.
new value.
That means you are going to revalue your assets and liabilities. Are you with me?
Yes, ma'am.
Now, when you're revaluing your assets and liabilities, the partners can decide that they want to record the revised values in the books of the firm. That means the partners will decide that the revised value means which value? The new
Revised
value.
value.
Revised value means new value.
New value.
The new value will be recorded in the books. So in this case, your new balance sheet will be at new value. The partners will
Yes,
decide
ma'am.
that they want to make the new balance sheet at new value. So
Yeah.
when they decide this, you have to prepare a revaluation account.
Yes,
Okay.
ma'am.
And they can also decide that they don't want to record the new values. That means the balance sheet should be at old value. In this case, what you do, you will just find out the profit or loss on revaluation and give effects through partners capital account. This I will tell you later, and you will give effects through partners capital account.
Partners capital account.
Now, if they say that your partners want to record the new value. So in that case, what will you do? You will prepare which account? Revaluation account. Which
Revaluation
account?
account.
Revaluation.
Revaluation account.
So your revaluation account looks something like this. Its nature is nominal in nature. What is the nature of the revaluation account? It is nominal in nature. Where
Nominal.
all the good things happen here and all the bad
Yes.
things happen here. Okay?
Yes, ma'am.
What is the rule of nominal account?
And that on the credit side, all the good things happen. Debit side, all the bad things happen.
Rule of nominal account is debit all expenses and
Yeah.
losses
Yes, ma'am. Credit all income and gains.
and credit all income and gain. So when I say assets, all the assets are treated like my wealth.
Mm.
Okay. And when I say liabilities, all the liabilities is treated as my uh, bad thing, or I could say they are the things that I owe. Okay.
Yes, ma'am.
Okay. So all assets are treated like my wealth. So tell me, if the value of the asset goes up, is it a good thing or a bad thing?
That's a good thing because asset is treated as wealth.
So value is going up. If the value of the asset is going down, it is a good thing or a bad thing?
A bad thing.
If the money that you are supposed to pay, your liabilities, is going up, it's a good thing or a bad thing?
Bad thing.
Bad thing. So liabilities going up is a bad thing. Liabilities going down
A good thing.
is a good thing. Very good. Now you have to also pass journal entries for this. What is the journal entries that you will pass? If the value of the asset is going up, can you give me the journal
Mm.
entry for this?
And asset like
This is which account?
revaluation account.
It is appearing on revaluation account which side?
Credit side.
Okay. So if the value of the asset is going up, so revaluation account is,
Credited.
so asset is,
Asset is credit, right?
revaluation account is,
Credited.
so asset is debited.
Okay, debit.
Okay. So when there is an increase in the value of the asset, what is the entry you will pass?
Revaluation asset account. No,
Revaluation
sorry.
account credit,
Credit.
asset
Asset account
account
debit.
debit. Again, if there is an
Yes, ma'am.
increase in the value of asset, what is the entry that you will pass?
Revaluation account a credit and asset account debit.
Okay. Decrease in the value of the asset.
Now it will be revaluation account debit and asset account credit.
Okay. Increase in liabilities.
Revaluation account credit and asset account, no, liability account debit. So,
Darling, where is increase in liabilities?
this thing, debit side, debit side.
What entry will you pass?
Yeah, revaluation account debit and liabilities account credit, right?
Decrease in liabilities.
Revaluation account credit and liabilities account debit.
So you need to remember this format of the revaluation account. What is the format of the revaluation account? What is the format of the revaluation account?
Ma'am, revaluation account, ma'am, there's a good side, bad side and a good side, ma'am, and it is a nominal
The
account
bad things. Where does the good thing happen?
at the credit side,
And the bad things will happen on the,
debit side.
okay. So when the partners have decided that they want to record the revised values, you will prepare revaluation account. If you're asked to
Yes,
pass
ma'am.
the journal entries, so if there is an increase in the value of the asset, what is the entry you will pass?
Asset account Debt. Yes, ma'am. It
Think
is asset account
increase
debited
in
to
the value
revaluation
of the
account.
asset is good or bad?
Ma'am, yes, ma'am, it's a good.
It's a good thing. So increase in the value of the asset, what is the journal entry that you will pass?
Increase revaluation account credit to asset debit. Asset
To
account debit.
asset account debit to revaluation account. Okay, if you don't
Okay.
understand that way, so what you can say, increase in the value of the asset is good thing. So if it is
Yes,
a
ma'am.
good thing, revaluation will be credited.
Credited.
Okay,
Yes,
decrease
ma'am.
in the value of the asset, good or bad?
Decrease in the value of asset. Bad thing.
It is a bad thing. So revaluation account will be,
Debited.
if decrease in the value of the asset is a bad thing, so revaluation account will be debited. What is
Debited.
the journal entry for this?
Now it will be revaluation account debit to asset account credit.
Okay, and the narration, if they ask you, the adjustments are made for decrease in the value of asset.
Yes, ma'am.
Come on. Increase in the value of your liability. Your liability is
Yes, ma'am.
increasing. It's a good thing or a bad thing?
It's a bad thing.
So if it is a bad thing, what will happen to revaluation account?
It will be debited.
If it is a bad thing, so revaluation account will be debited. What is the journal entry for this?
Revaluation account debit to liability account credit.
Okay, what will be the journal entry?
Adjustments made for the increase in the value of liability.
Adjustment made for increase in the value of liability. If there is a decrease in the value of your liability,
It's a good thing. So,
hmm,
so liability account will be credited, right?
sorry,
Sorry, revaluation account will be credited, not liability.
okay, revaluation account will be,
Credited to liability account debit.
yeah. So any good thing, revaluation account credit. Any bad thing,
Yes, sir.
revaluation account debit. So it is a
Debit.
good thing. So revaluation account will be credited.
Yes, sir.
Okay. Now what happens is you will do your increase or decrease in the assets and liabilities. After that, you have a situation that there may be some unrecorded assets for you.
Yes, sir.
Unrecorded assets is a good thing or a bad thing?
It's a bad thing, right?
You have some wealth which you just came to know about.
Oh, okay.
So unrecorded
It's
assets is a good thing or
unrecorded.
a bad thing?
That's a good thing.
It's a good thing. So if this is a good thing, then what? Revaluation debit or credit?
Debit.
So revaluation, why debit?
And debit only. Oh, sorry, credit. Yeah.
Revaluation credit. So
Credit.
unrecorded assets will be
Yeah. No, unrecorded assets will be debit.
debited. If it is a good thing, revaluation credit. If it is a
Yes,
bad
sir.
thing, revaluation.
Revaluation debit.
Okay. If you have an unrecorded liability, that means you are all
Yes.
of a sudden come to know you have to pay something. It is a good thing or a bad thing?
No bad thing.
If it is a bad thing, then what?
Ma'am, revaluation account will be debited.
Revaluation account will be debited. What is the journal entry that you will pass?
Revaluation account debit to unrecorded liability account credit.
Revaluation account debit, unrecorded liability credit. This is the adjustment that you are making for recording the unrecorded liability.
Yes,
Yeah?
sir. Hmm.
Okay. Now, you might have two situations. The first situation is that your credit side exceeds the debit side. Okay.
Yes, ma'am.
Your situation one is that your credit side exceeds the debit side. What does this mean?
Bit side. Ma'am, that there's more
See,
profit like
the
that.
good is more.
Yes, the good is ma'am.
If the good is more and the bad is less. Okay. So whatever is over here, good will be recorded on both the sides.
Both the sides.
Okay. From that you will minus all the expenses. That means a debit side. What you get over here is called the net gain.
Net gain.
Hmm? So if you have a gain, the gain will be going to whose account?
This.
The assets and liabilities belong to the old partners. So if
Yes,
there is
ma'am.
any profit or if there is any loss due to revaluation, the benefit or the loss will go to the partners.
Partners.
It will go to the partners' capital or current account and it will be
Current
distributed
account.
in their old profit sharing ratio. So whatever is the gain will come over here and it will
Yes,
go
ma'am.
to partners capital account or current account, year debit and year credit. Okay.
Yes, ma'am.
And it will be distributed to the partners in their old profit sharing ratio.
Yes,
Old
ma'am.
partners old ratio, that is what we say.
All ratio.
Okay. So if the credit side is more, debit side is less, or I could say if the good is more and there is bad is less,
Bad is less.
what you get is called what?
Net gain.
Net gain. So in the net gain, revaluation account will be debited and partners capital account will be credited.
Related.
Are you with me?
Yes, ma'am.
Okay, fine. If you have an otherwise situation,
Yes, ma'am.
the bad is more.
Bad is more.
Whatever is over here, both the sides, the total of the bad side or the debit side is recorded.
Yes, sir.
So what you will get over here is called what? Net
Net
loss.
loss.
And where will this net loss go?
To partners capital account debit side.
It will go to the partner's capital account, the debit side. Okay. So what will be the journal entry?
Partners capital account debtor to revaluation account.
Partner's capital account debit to
To
revaluation account.
revaluation
The
account
loss on
credit.
the revaluation is transferred to partner's capital account. So this is the
Yes,
closing.
sir.
Okay. Now what is your
Yes, sir.
format of your revaluation account? All the good things happen where?
Credit side.
All the bad things happen where?
Debit side.
So your asset is increasing. Good thing or bad thing?
Good thing.
Asset decreasing.
A bad thing.
Liability increasing.
Good. Bad thing.
Hmm?
Liability increasing. Bad thing.
Liability decreasing.
Good thing.
Okay, this is the format of your revaluation account. Unrecorded assets.
Good thing.
Unrecorded loss.
Bad
Liability.
thing. Liability is bad thing.
The net gain, okay, if you're giving your partner some remuneration to revalue these assets and liabilities, if you're giving your partner some remuneration to revalue these assets and liabilities, that means it is an expense for you. So even that
Yes,
is
ma'am.
a bad thing, and there is some expense for reformation of the partnership. So even that comes over here. Okay. This we will talk
Yes, ma'am.
later about. So partners remuneration to revalue and expenses for reconstitution both comes on the debit side.
Debit
Then
side.
the profit on revaluation will be the balancing figure. This or this loss on revaluation. It will be the profit on revaluation or loss on revaluation. which will be transferred to partner's capital account or
Partner's
current.
capital or current account.
Okay, so this is the format of revaluation and the explanation of the revaluation. I wanted to do it. Can you tell me when do you prepare the revaluation account?
When we prepare the new revaluation account and when the old balance sheet.
When the
Right?
partners have decided to make a new balance sheet.
Okay.
So when there
Okay.
is a new balance sheet, and you have to record the value of the assets and liabilities at a new value, you will prepare the revaluation account.
Okay.
Are you
Yes,
with
ma'am.
me?
Yes, ma'am.
There is another case also when you do not have to record the revised values. That means the old balance sheet would remain the old balance sheet, and you do not want to change the value of assets and liabilities in the new balance sheet. In
Yes, ma'am.
this case, what you have to do, you have to just record the profit or loss on revaluation through adjusting entries. That means old
Yes,
balance
ma'am.
sheet will remain old balance sheet.
Yes, ma'am.
But I want to have the gain or loss on revaluation distributed.
Okay.
So what will you do?
Yes.
You will find profit or loss on revaluation and pass adjusting entries. Okay.
Okay.
You don't want to change old balance sheet. If you don't want
Yes,
to
ma'am.
change old balance sheet, only adjusting entry. If you
Yes, ma'am.
know, if you know changing old balance sheet, then what will you do in that case? Only pass adjusting entries. Are you with me?
Yes, ma'am.
So if you're not changing your old balance sheet, in that case, you're only going to pass adjusting entries. So that means you have to find out the profit or loss on revaluation. And the
Yes,
profit
ma'am.
or loss on revaluation has to be given effect through which entries? Adjusting entries.
Interesting entries. Yes, ma'am.
So all the good things you start with. Okay, what are all the
Yes,
good
ma'am.
things? Asset
L-
increase. Or
Asset increase, liability decrease.
so all the good things you will write, add.
Yes, ma'am.
From that you are going to subtract all the bad things. What are the
Yes,
bad
ma'am.
things?
Now decrease in asset and increase in liability.
Okay, decrease in asset, increase in liability, or there could be remuneration, or there could be unrecorded liability. So from all the good
Yes.
things, when you're going to subtract all the bad things, you are going to get the net effect on revaluation.
Yes, ma'am.
Step number one is we'll first calculate the net effect on revaluation. So the first thing that you will do is when you don't want to record the new balance sheet at new values. Okay, you don't want to record the new balance sheet at new values,
Sheet and
but
new
you
balance.
have the profit or loss on revaluation through adjusting entries. So in that
Adjusting
case, what
entries.
do you do? You first calculate the net effect of revaluation.
Net effect of revaluation.
How do you calculate the net effect of revaluation? Good things minus the bad things.
Good things minus bad things.
Okay. After you calculate the net effect on revaluation, you will find the sacrificing or gaining ratio.
Yes, ma'am.
Okay. So you have the old ratio minus the new ratio. You
New
on.
ratio.
You will get the sacrifice or gain ratio. If the answer is negative, it is a gain ratio. If the answer is positive, it is a
Is a
sacrificing ratio.
sacrificing ratio.
Okay. So for
Yes,
the
ma'am.
gaining partner, it will be whatever is his share gained into the net effect of revaluation.
Valuation.
And sacrificing partner, share sacrificed into net effect of revaluation.
Net effect of valuation.
So for the profit on revaluation, you will do gaining partner debit, sacrificing partner credit.
Credit.
Yeah?
Yes, ma'am.
Are you sure?
Yes, ma'am.
And for loss on revaluation, I will teach you later. So this is the steps for it. I'm just going to stop the meeting,
Yes, ma'am. Okay.
and I am going to leave this so that you can make notes on it.
Okay, ma'am.